Welcome to the Startup Espresso. I'm Hall T. Martin, the host of the show, where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. Investors are looking for a high-growth company with good unit economics. In preparing for your fundraise, you need to identify a handful of key metrics that show your growth story. For seed stage, you must have a run rate that is above $10K revenue per month. For the growth stage, you need to be on a revenue run rate of $50K per month or better. Next, calculate your growth rate. You need to be doubling sales year over year. Anything below 50% annual growth rate will not be seen as a high-growth company. Recurring revenue is a priority because it shows predictable growth. In fact, investors care more about predictability than growth rate. This factor, more than any other, drives your valuation. Show your cost of customer acquisition and lifetime value in unit economic terms. Choose 3 key numbers from the above to showcase in your presentation. Don't make them dig through your spreadsheets to find it. Instead, pull out 3 numbers and show them. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start us into today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.